December 2025 just broke Vancouver's housing market. Not softened it, not cooled it, it broke it. Vancouver condos crashed 12% in price year over year, and Vancouver houses crashed 4%, and sales crashed to a 20-year low. And since the peak in April 2022, Vancouver condos have lost 15% of their value. That's almost $125,000 that vanished each and every unit. Everyone kept saying it's just a correction, it will bounce back. And no, it did not. I've watched real estate markets for over 25 years, and I've sold over $230 million in real estate in Vancouver. I've seen the warning signs, the denials, the coping, and I'm telling you right now, what happened in December wasn't a blip. It was a breaking point. There are 7 economic forces that converged at once. They all shattered the price resistance that held through all of 2025, and they're not going away. If you own property in Vancouver or the Fraser Valley, or you're thinking about buying, the next 15 minutes will change how you see everything, because the crash everyone predicted for years, it's not coming. It's already here. Here's what we're covering today. The 7 economic pressures that turned December 2025 from just another down month into a full-blown market correction start. And why this matters, because prices didn't just dip. They plunged 4% to 12% across segments. In 1 month, and every indicator, including sales volume, inventory levels, new listings, is screaming that 2026 will be far worse than 2025. And we're going to break it down. So I'll walk you through each force with real numbers, real consequences, and real implications. No speculation, just data. And by the end of this video, you're going to understand what 99% of buyers, sellers, and even realtors are still missing, what the media is not telling you. Of course, this is not about panic, it's about clarity. So let's get into it. December 2025 happened a very different way that most Decembers happened. Vancouver single-family homes sales dropped 12% year over year. It was around 433 sales versus almost 500 sales the year before. And prices of Vancouver single-family homes fell by 4%, just nearly over $2 million, down from $2.138 million the year previously. And new listings, they surged 17%, and the active inventory also climbed. That's very significant, but that's not the headline. The main headline is that Vancouver condos, this is where the floor really fell out, and sales dropped around 11%, but prices crashed to 12% to $720,000, down from $814,000 the year before. That's almost $100,000 loss in 12 months. And that's the steepest decline in any of the segments for Vancouver. In the Fraser Valley, however, the story is much different, and I'll get to that in a second. But the single-family homes in the Fraser Valley tumbled 9% to 1.5 million, down from 1.7 just the year before. That's roughly around $160,000 of vanished equity. Real families and real losses. Fraser Valley condos fell 6% to $500,000, 500,000, and the sales also collapsed by 18%. The Vancouver Sun confirmed what the industry didn't want to admit, is that Vancouver just recorded its lowest annual sales in over 2 decades. There was only 23,800 transactions, down 10% from 2024 as well. Now, throughout 2025, the narrative kept saying that prices are holding and it's just slow. But December completely changed that story. We seem to have broken a trend. Therefore, we have to ask what changed and what finally broke the dam. Because this wasn't market softness. This was a structural collapse of the trend that has been going on in all of 2025. And when you see what caused it, you'll understand why 2026 may look even worse. From peak to now, the real damage has happened. Because when we talk about the 7 forces, you need to see the full picture. From peak to December 2025, peak being around March and April 2022, there was real damage done. For Vancouver single-family homes in April 2022, the average price was $2.14 million. By the time it got to December 2025, it got to $2,050,000. That's down 4.2%, which is not too bad. But Vancouver condos in April 2022 were at $850,000. Now in December 2025, they're down to $720,000. That's a 14.8% decline. So that's around $125,000 that just vanished. Now, if you look at the Fraser Valley, this is where it gets brutal. Fraser Valley single-family homes peaked in February 2022 at $1.9 million. In December 2025, that same home is worth now just $1.5 million. That's a 20.6% decline. Or if you had bought in that time, that means you have just lost $400,000 in your home equity. Fraser Valley condos are not too far from that either. They peaked at March 2022 at $643,000, And by the time they got to December 2025, that value was just about $500,000. That's down 21.4%, or $137,000 gone. If you bought a Fraser Valley home at that peak, you lost nearly $400,000 in equity. That's not theoretical, that's actual market. Now, people don't think about it this way. They think about neighborhoods, they think about schools and their lives, of course. But the market doesn't care what you paid. Therefore, the question becomes, why did December accelerate what has been slowly happening for 3 years? Because 7 forces hit all at once, and I'm going to go over each one of them right now. And they're all getting worse. Trump's tariff tantrum is the first force. Donald Trump threatened and then implemented 25% tariffs on Canadian exports. The conference board ran the numbers, and Vancouver's real GDP could fall by up to 1.3% in just 1 quarter from a 3-month tariff period. That's, if you have a tariff implemented in 3 months, your GDP could fall 1.3%. That's very sensitive. The Canadian dollar also collapsed, and we're heading towards a possible, 1.4, 1.5 Canadian dollars per US dollar. And you might think, well, it's just tariffs on steel. That doesn't really affect housing. But watch how this domino effect works. Therefore, follow this chain of reasoning and follow this chain with me. Construction costs have exploded 15 to 20%. Developers really can't build profitably anymore, especially given the government interventions that have put a freeze block in the Canadian housing market. Now, projects freeze, the ones holding completed inventory panic and slash prices to generate any cash flow. Because let's face it, they also have to pay their banks because they have borrowed money to be able to construct those homes. Every discounted sale now becomes a new benchmark, the new comparable, dragging down every property around it. Your cost of living spikes. Groceries are up, your gas is up, everything imported costs more. When monthly expenses jump from $500 to $800 or $900, that mortgage payment suddenly looks pretty hard to make. Economic uncertainty freezes even the savviest of buyers. The Brookings Institute confirmed that, tariffs kill jobs. They suppress wages, they inflate prices. That's the opposite of what a multi-million-dollar housing market needs. And BC's economy depends on exports. It depends on lumber, it depends on resources, manufacturing. And when all those sectors contract, high-paying jobs disappear. And those are the exact jobs supporting those $2 million purchases. So Trump didn't just pick a trade fight, he destabilized the entire economic foundation of holding up the Canadian real estate. And it's accelerating. Force number 2 is the late decision of the BC Supreme Court on the Cowichan land title chaos. The Cowichan land title decision was a big blow to the Vancouver real estate market and all of BC. On August 2025, the BC Supreme Court declared that Aboriginal title over 7.5 square kilometers of southeast Richmond was deemed indefective. So thousands of private property owners, including some of the clients that I have, were affected. People with Crown granted fee simple title, the gold standard of ownership. The court ruled that Crown grants didn't extinguish Aboriginal title and that your title was defective. Now think about what that means. Properties people thought they owned outright now have overlapping Aboriginal title claims. The legal uncertainty underpinning every real estate transaction, it was just shattered. The Fraser Institute did not soften it when they said that this decision severely undermines the legal certainty investors rely on and deepens BC's investment climate crisis. In fact, $85 billion fled Canada in the first half of 2025 because of this issue and other government policies. But the real damage goes deeper. Therefore, consider these implications. Can you even get title insurance when the courts rewrite ownership rules retroactively? Buyers actually started asking existential questions like these. Do I actually own this? Can someone challenge it later? This isn't just about Richmond. If Aboriginal title can be declared or declared over top of private lands in one city, what stops claims in Burnaby, in Surrey or Coquitlam, or even across, BC? BC Assessment actually warned that 2026 assessments might reflect this uncertainty, potentially lowering property values in the affected area. So when property rights become uncertain, capital doesn't negotiate, it just leaves. Foreign investors won't touch unclear ownership. Domestic buyers will also hesitate. And banks, they stop lending. Prices adjust downward to reflect this risk. So this decision injected fundamental legal uncertainty into property ownership across British Columbia. And you can't just charge premium prices when buyers don't know if they really truly own what they are buying, right? Now, this third force that's happening are the economic fundamentals collapsing in Canada. Canada's economy is collapsing. GDP growth for 2026 was projected at just 1.2%. That's down from 1.7%. In 2025, economists also see no rebound coming. Quarter 2 2025 actually saw GDP contract by 1.8%, and that's recession territory. Statistics Canada confirmed that weakness are happening across multiple sectors. This isn't just one struggling industry, this is a systemic failure. Unemployment rate rising from 5.8% in 2023 to over 7% by mid-2025. Student unemployment also hit almost 18% in the summer of 2025. That's the highest since 2009, outside of the pandemic, of course. BC's tech sector, continuous layoffs. These are the high earners that are buying Vancouver or were buying Vancouver's real estate up until now. So the Canadian dollar spent late 2025 in freefall, and it's also projected to hit $1.5 for every US dollar in early 2026. So every cent weaker makes imports more expensive. It destroys purchasing power, which is why you're seeing a lot of your grocery items go up when we import them. Economists kept saying it's temporary, we're going to recover, but the data is saying otherwise. Therefore, here's the reality. When people lose jobs or fear losing them, they don't buy $2 million homes. When grocery bills double from currency weakness and inflation, they can't make mortgage payments. When GDP contracts, wages stagnate and wealth evaporates. Vancouver's economy is especially vulnerable. It's tied to the global trade, foreign investment, and sectors like the tech, like the construction industry, resource industry, that are all contracting simultaneously. And you can't support inflated real estate prices on a crumbling economic situation. It's never worked, and it most likely will not work now. The fourth force is the mortgage renewal cliffhanger. So on 2025, according to the Bank of Canada, 60% of Canadian mortgages will be renewing late 2025 to 2026, and they're going to renew at dramatically higher rates. 5-year fixed mortgage holders renewing right now, they face a 15 to 20% payment increase versus December 2024. That's an extra $500 to $800 per month. But this is not the worst. Even with Bank of Canada rates, even if they cut them to 2.5%, the renewal rates are still 200 to 300 basis points higher than what people locked in for during 2019 and 2021. Now, let me make this concrete. The typical Vancouver buyer purchased in 2020 and 2021. They bought at $1.8 million on average with 20% down. So they acquired around a $1.44 million mortgage. The original rate, probably around 1.79, 5-year fixed. The original payment was $5,800 per month. Now they're renewing, and the new rate is 4.5% to 5% currently. So their new payment is $7,800 to $8,200 per month. That's an extra $2,000 to $2,400 each month, or $24,000 per year to $28,000 per year. And most families can't absorb that. Their income didn't jump 40%. Their expenses already increased with inflation, but they do have something they can do. Therefore, they face 3 choices, in my opinion, and none are good. They can cut all discretionary spending. They can tighten belts dramatically, which kills the broader economy. Restaurants, retail, services, they all suffer. The second option is they sell or downsize or rent. That would flood even more supply onto the already saturated Vancouver real estate market. The third option is they can default. They can have forced sales, bank liquidations, and brutal price discovery. And we are already seeing signs of that. Listings are up 10 to 17% year over year across all segments. They aren't just lifestyle moves. These are distressed owners who are getting ahead of the cliff. My mortgage broker called me the other day and mentioned that he hasn't seen many clients like this calling him regarding this being distressed to make their payments. This has never occurred in his 25-year career. And the cliff keeps getting steeper through all of 2026. Now, force number 5 is that there's a condo oversupply crisis because we built too much. We just simply built too much. Vancouver's condo market is drowning in unsold condo inventory, and the numbers are staggering. In quarter 1, 2025, there was 2,500 condos that completed were unsold, and there was another 2,400 units nearing completion by the end of 2025. So that's a total of almost 5,000 units that are unsold across Metro Vancouver. And Rennie Intelligence projected a 60% surge of unsold inventory by the end of 2025. and they nailed it. But here's why this destroys the market. Therefore, understand this cascade. Developers holding completed unsold units bleed cash every month. They have to pay property taxes, they have to pay strata fees, they have to pay financing costs because they borrowed money to be able to build. So they have to liquidate, they have to cut prices. And every sale at $680,000 that should have been $780 becomes a new comparable. In fact, I just completed on a sale for my client in Burnaby, and she was able to acquire a unit at $1 million, and that unit was priced at $1.2 million just a year ago. Small investors who bought pre-construction in 2019 to 2021, they were expecting 20% gains. But guess what? They're staring at 10 to 15% losses right now. And many people are walking away from deposits rather than completing purchases. As B&M Bloomberg nailed it when they said that developers put too much emphasis on investor-focused condos. Those weren't necessarily the homes that people really wanted to live in. December's 12% condo price decline, that's what happens when shadow inventory floods the market. Desperate sellers competing, each price cut forcing the next seller lower. And this is a self-reinforcing downward spiral. And there's no floor yet that I can see. Now, force number 6 is the foreign capital flight that I alluded to earlier. $85 billion left Canada just the first half of 2025. I still don't have the figure for the latter half of 2025, but I'm sure we're going to get that soon. Specifically, Chinese investment that propped Vancouver's high-end market for years, that's over now. The Chinese property sector is in free fall still. Evergrande and Country Garden collapsed, and the Chinese GDP growth is also the weakest it's been in decades. Not to mention the capital controls that were also tightened, which makes it harder to move money out of Asia and out of China. Wealthy Chinese are also facing their own economic crisis. Canada's foreign buyer ban, which was extended through 2027, eliminated this demand source, while really only 2 to 6% of total transactions were related to foreign buyers. But in general, they mostly concentrated around high-end properties that were over 3 million, such as new luxury condos or investment properties. And the Chinese nationals historically accounted for 76% by volume and 89% by value of all foreign purchases in Vancouver. But now they're gone. Therefore, there's no replacement. The Middle Eastern buyers or other Asian buyers, American buyers, they're minimal compared to the historical Chinese volumes. The top end of the market, where declines always start, is seeing 10 to 15% drops as well. When the highest priced properties reset lower, they change expectations for everything else. The capital that inflated Vancouver market has fled, and it's not coming back. Now, force number 7 is the convergence of all these 6 previous forces that I talked about. The 7th force is the convergence itself. In December 2025 is when all these 6 forces, they hit a critical mass simultaneously. Trump tariffs creating economic chaos and costs of inflation, Cowichan decision undermining property rights in British Columbia and undermining the demand for property, collapsing economy destroyed the buying power of the buyer, mortgage renewals are forcing distressed sales, and condo oversupply is creating a price war. And also, of course, foreign capital flight removing high-end foreign support. Any one of these pressure points would drop the prices of Vancouver real estate significantly, but all 7 together create catastrophic failure. Therefore, this is why December 2025 is fundamentally different from every month before it. The psychology flipped. The narrative has changed, and the sellers who waited perhaps all year hoping for a spring bounce are capitulating now. The mindset shifted from wait and see to get out while I still can. And FOMO, the fear of missing out, is now dead. And replacing it is the fear of overpaying, which dominates now. So buyers know waiting means better prices, and sellers know waiting means more competition and lower values. This is the psychological shift that turns corrections into perhaps major crashes. And it happened in 2025. We just broke the trend. So here's where we are. December 2025 marks the inflection point where Vancouver and Fraser Valley real estate shifted from a slow decline to an accelerating correction. In other words, we broke the trend. The price stickiness that characterized all of 2025 has shattered. It was a distribution phase, perhaps. Sellers who held out hoping for a recovery now face a harsh new reality that 2026 won't be better. It might be very, very much worse. More mortgage renewals are hitting Q1 and Q2 2026. More condo completions are, flooding the market with supply. More for sales, more downward pressure. every fundamental point is pointing to the same direction, and that's down. 7 forces converged to break what everyone thought was unbreakable. Those forces aren't temporary, they're structural, and they're intensifying. The question for 2026 isn't whether prices will fall further, they will. The question is how far and how fast. I called the top in March 2022, and of course, a few of my clients have listened, and we were able to safely exit the market at that time. I'm calling for continued decline through 2026. I hope that whoever's watching this video, you may listen to this now. The data doesn't lie. The market is sending clear signals. December 2025 was a breaking point, and what comes next will define the market for years. I'm Richard Morrison, and I've been investing in real estate for 25 years across the United States and Canada. I've closed over $230 million in deals for myself and my client. I've guided clients through the Great Financial Crisis in 2008 and the COVID chaos and periods of incredible growth. My clients didn't just survive those crises, they thrived coming out of them. Because we understand the fundamentals, we saw the signals, and we acted on reality, not hope. If you want to understand what's really happening in this market, not what the headlines or what the banks or what the media tells you, subscribe to this channel, because 2026 is going to be a year that nobody forgets, and you need to see it coming.